I think it's super bullish. Gold is clearly in a secular bull market. I think the price targets that you and I were talking about 5 years, at around $9,000, if you remember.
Yeah.
I think that's still the case. We probably have to revise them, and it's probably gonna go even higher. The only caveat would be if we see gold now really accelerating dramatically over the next few months and maybe 1-2 years, doubling in price immediately and running to maybe 8,000-9,000 in the next 1 or 2 years, then it would probably have the characteristics of more of a bubble. And we would have to be careful. But if it's just pushing higher like it's been doing now the last 14 months, I think it's very healthy, it's very sustainable, and we're going to see much higher prices. And this can last for at least a few more. Gold's path is more and more proving what experienced analysts have known for a long time. The price of the metal has been going up for a long time. The prices are staying the same. There aren't many signs of big drops, which suggests that real demand is making up for everyone. This steady growth is due to 4 main factors: more money flowing around the world, a drop in the value of bonds, record high buying by central banks, and China's never-ending demand. All of these things are changing the balance of power in the world's money system and speeding up the end of the decades-long rule of paper money over gold. There is more to this change than just price. It's about trust, power, and the future of money itself. Florian Grummes, a well-known and recognized expert on both precious metals and cryptocurrencies, says that gold's rise is still healthy and sustainable. The current pace is based on strong foundations, not guesswork. Grummes talks about how institutional investors are pushed to see gold as the only long-term option when they see persistent inflation and falling bond markets. When you look at the bigger picture of geopolitics, de-dollarization, Chinese accumulation, and the creation of gold-backed trade payment systems, it's easy to see why the trend is so strong. Grumman thinks that the price goals of $9,000 an ounce that were talked about many years ago are still valid and may even need to be raised as the cycle goes on. As countries and central banks get ready for a world without the dollar, the gold bull market could last for years. We now show you clips from Florian Grummes' visit. Before we go any further, please subscribe to our channel and click the bell button to get updates when they happen. Thanks, and have fun with the movie, not Bitcoin but gold. The central banks of China, Russia, and India are all buying gold. Americans need something new so badly that they can keep running there, and it looks like they chose the digital asset area to be the center of power. In a way, it does make sense. The digital dollar is a much better stable coin. It's not though. I mean, I'm really worried about the whole thing with the monitoring. It's possible that Trump doesn't fully understand what's going on. It seems like a lot of people are telling him what to say and do. I'm not sure if he really got it though. Since the United States doesn't have enough gold, this is likely their last shot. I told what I thought about it. There are 4 big and very important things that I think will move gold. The first one, which I've already talked about, is the M2 money provider. The system's liquidity has been growing steadily over the last few years and especially in the last few months, not just in the US but also in the Eurozone. Japan, China, and pretty much everywhere else. When you look at South Africa or Brazil, the numbers are pretty much the same. So the second big reason is the bond market, bear market, especially for long-term bonds. I think the Fed has already lost control of the long end of the bond market. There is still a lot of growth going on, and it's hard for big investors to find safe, conservative, long-term bonds when the bond market is down. That's why I think more and more big money will go into gold, which is the only other thing they can buy. That's the second driver. 3. Central banks buying things is the third driver. That much strong demand from central banks hasn't been seen in decades. Yes, of course it is. People all over the world became shocked when Russia attacked Ukraine and realized that the US, NATO, and Europe can take our property whenever and however they want. A lot of developing markets, central banks, and countries are now trying to move away from the dollar and the euro, which is also known as de-dollarization. Gold is being bought by central banks. They aren't after gold, but they also don't care about $100 or $200. The last few days have been just like that. In the past 14 months, whenever there was a consolidation in gold, there wasn't a big drop because actual demand came back into the market so quickly. Another very important one is China. In fact, it's likely the most important one after the state banks. Gold is being bought by China like crazy. The people in China who bought gold is their thing. Also, the central bank buys gold every month. China already makes more gold than any other country, and they keep buying more gold. Of course, they do this to attack the United States because gold is the opposite of the fake dollar system, and they want to build gold vaults in many other countries. So if they do business with Saudi Arabia and buy oil from them, they will give them the renminbi. The Saudis can then take these renminbis, go back to their own country and say, here's the paper renminbi, show me the gold. I mean, this is what the Chinese are working on, to build an alternative to the US dollar system that will give people faith in their own system that won't go away. I mean, those 4 drivers I just talked about will be around for at least the next year, 2 or 3. It might be 10 years or even longer before this is over. I also think that gold will be well backed at that time. There will be a lot of physical pressure. Also, because of these 4 factors, the Anglo-Saxon paper gold Ponzi plan system that has been in place for more than 500 years is now coming to an end, right? We know that trading 200 paper ounces of gold for 1 real ounce of gold has been the main way that gold prices have been set or found over the past 50 years. That's generally how the price fighting has taken place. This is now being wound up. It might take a while. As I already said, gold is very strong right now. There are no real pullbacks or dips. Even though people are running after the train, it keeps going faster. And whenever there is a dip, big hands show up right away to make demand. I also think it's very strong. It's clear that gold is in a long-term bull market. Price goals were something you and I talked about 5 years ago. I think it was around $9,000. That seems to still be the case. It's likely that we'll have to change them and the price will go up even more. The only thing that should be taken into account is that if gold prices really start to rise quickly over the next few months and maybe 1 or 2 years, doubling right away and then going on to maybe $8,900 or $9,900 in those same 1 or 2 years, then it might be more of a bubble and we should be careful. However, if it keeps going up like it has for the past 14 months, I believe it is good and will continue for a long time, making prices much higher. This can go on for at least a few more years. The markets we have now are full of contradictions that make things more unstable for both businesses and regular people. On the one hand, central banks' huge injections of cash continue to drive up the prices of stocks, real estate, and even antiques. Along the same lines, though, consumers' buying power keeps going down. It's not because of natural growth that inflation stays high, but because paper money keeps growing. As a result, tactics for keeping wealth are becoming very different between wealthy people and the average family. The value of money falling can be used to buy gold, silver, or even special markets by people with the money to do so. At the same time, most people are having a hard time keeping up because their wages aren't keeping up with the rising cost of living. This change is very clear in the precious metals business. Gold has already shown how strong it is, but the real fireworks will happen when silver takes the lead for good, which is a sign of a bull market peak. For now, silver's steady but slow rise hints that the cycle's strongest part is still to come. At the same time, sudden panics that are followed by miraculous rebounds made possible by new money show that the tricks used to manipulate the economy are still the same. This mix of no growth, fake growth, and inflation is what stagflation looks like in a textbook, and it is very bad for the middle class, but also very profitable for those who time the markets, right? We need to go back to the interview. Once upon a time, I was a true gold boy who thought the end of the world was just around the corner. It didn't happen and things went on as planned. I used to think I was the most important person in Bitcoin, but things didn't really work out that way, and in the end things worked out anyway. I mean, who knows? Maybe in 10, 20 or 30 years. But there's also the chance that Bitcoin will be such an old technology by then, is totally out of date and doesn't work with anything new, and AI is in charge. It's so much better now and they've long since cracked the blockchain code. Who knows? You can think of a lot of things. How then can I know what will happen in 20 or 30 years? As a dad who works for himself and has 2 kids and a lot of other duties, I can't put all my money on Bitcoin anymore without losing it. I mean, Bitcoin has changed my whole life, without a question, but I'm not sure, as I said, and from what I can tell right now, Bitcoin is a little behind. This year gold is better. The gold market is a great bull market. Oh, and yeah, who knows? In other words, Bitcoin will go back down to $40,001 in the next wave. I might tell you something totally different tomorrow, but as I said before, think about the short-term risk-reward. Looking ahead a few months, maybe 6 months or a year, I don't really see a low risk. It is well known that the stated inflation rates are not very reliable. Yeah, that's exactly what's going on. For starters, the amount of money in circulation has grown by a huge amount, and not just in the United States. When you look at these numbers for the EU, Japan and China, it's clear that everyone is making money. On the other hand, people are losing faith in these fake currencies because they can't buy as much with them. That's why people are trying to... In the end, real estate is still holding up pretty well because it's a safe haven away from risk. There are some differences between regions, but generally things are going well. And and in many places, real estate is still getting more expensive. The general stock market is higher, even though there are a lot of bad things going on in the economy and what you can call a stagflationary situation. This is because people buy stocks as a hard asset. People are taking their money out of the fiat world and putting it into gold, other valuable metals, mining stocks, and even crypto. Fiat money is losing value and people are losing faith in it. This means that even your old and rare coins are going up in value. I mean, you can see it in many places. Society is getting less stable. Some of them are almost at war with each other. These are all the results and they are still happening. I don't see a way out of this. On the one hand, it says that governments and central banks are making people afraid of the money supply, which is the same thing as printing money out of thin air. On the other hand, consumers and people who use these banking systems are losing faith because they can see that their money isn't worth as much as it used to be. At the end of the day, fiat currencies are becoming less valuable every day, and all of that is going on at the same time, and it means that your investments or goods may go up in value, but they haven't really changed at all. A nominal value or dollar amount is all that people look at when they think about the value of an object. I mean, how many people are really looking at Bitcoin or figuring out how much money they have? It also tells you something very different about the next 5 or 10 years when you look at it in terms of gold ounces instead of just US dollars, euros or Canadian dollars, right? As a little homework, every 4 months I'm updating a little exit sheet that keeps track of my net worth. You can see how hard it can be to keep up with your overall net worth when it comes to Bitcoin and gold, you know? No, you don't have more Bitcoin and gold. You might have more euros or dollars. It is common for silver to be the star of the precious metals bull market at the height of a very important long-term bull market. That's why silver hasn't really shown up and done its own thing yet. There has been a nice rise. Even though there is a strong recovery, silver is not really going crazy right now. We still think that the bull market in rare metals has a lot more to offer. On the other hand, a very small group of people manage huge amounts of liquidity along with large trading firms, hedge funds, algorithms and bots. I mean, remember the stock market crash in late March or early April? Bitcoin also went down a lot. During the last few days of that panic selling, silver and gold also lost value. Then amazingly, a few days later, there is again liquidity, and after 2 months the stock market has reached a new all-time high, and that's been the plan for a few years now, and I think it will stay that way. From a big picture point of view, the economy is not growing. We don't have much real growth left. And if there is growth, it's all fake because the government prints money or does fiscal stimulus. On the other hand, because money is being printed, inflation is still going strong. When you add all of this up, you get inflation, which is bad for regular people. But people who know how to trade can make a lot of money because of the moves we've seen in gold and silver and what I think we'll see in Bitcoin on the stock market in the fourth quarter. It's almost the end of the year, like Santa Claus. Usually starts in the middle of October. In other words, you can make a lot of money in the markets if you know what you're doing. People on the street, on the other hand, don't have that much money and don't know how the markets work. The best thing to do would be to watch sports games in the evening. It's been getting worse since the financial crash, right? And it's much easier for rich people to make more money while it's getting harder and harder for most people to make ends meet. So that's a bad thing, and that's why you see rising tensions in countries all over the world, right? There are a few other reasons too, but this is the most important one. I mean, if society as a whole is doing well, then it will be quiet and everyone will get along. Things are very different if everyone is trying to stay alive. Yes, many people still don't realize how the world's financial stage is changing. Inflation keeps lowering people's real buying power, even though official numbers tend to downplay it. This is like a silent tax on people who save money and people who work. At the same time, panic and liquidity injection cycles are used by central banks and big financial players to keep things under control. These events may look random at first, but they follow a clear pattern that helps those closest to the flow of capital. In this situation, assets with real value like rare metals, certain stocks and tangible goods are more than just investments, they're ways to stay alive. People have put their savings in bonds, currencies and the traditional banking system for many years. Still, people are losing faith in these tools. As the value of paper money drops faster, the move into hard assets is not just a hedge, it's a way to protect oneself. Once again, valuable metals are showing how strong they are. Gold is still in a steady bull market with institutional demand supporting its base. Silver, on the other hand, is still out there stifling the potential energy of a much bigger move. In the past, the most important parts of the metal cycle have happened when silver finally makes its case. That moment hasn't fully arrived yet, which means there is still a lot of good to come. At the same time, communities are changing because the wealth gap is getting bigger. People who understand capital cycles, how inflation works, and how to manipulate money can turn disasters into opportunities. But most people lose hope as prices rise and wages stay the same. This difference not only makes the economy unstable, but it also causes social and political problems all over the world. This tells us something very easy: the world economy will have a rough time in the coming years, but also full of chances for those who get ready. Keep your mind sharp and your information up to date.
If you thought this study was helpful, please like, subscribe, and share your thoughts in the sections below.